fell across both manufacturing and service sector in June. Service companies operating in China can signal optimism towards a 12-month business outlook in June that says the overall degree of positive sentiment edged down to its lowest since January. Let me get this. The comment here, the latest signals of further loss of growth momentum in the Chinese economy. Tentative signs of improvement were evident in manufacturing, however, with new orders and purchasing rising slightly in June. Further stimulus measures, and this is the key in these industrial economy stimulus measures to ensure growth momentum improvement in the second half and reach the target of 7% there. Key points: service sector activity eased to 5-month low, slowest increase in new business activity for 11 months, and modest reduction of there. And this is the end of market on China. And Brazil. This will be our final one. Private sector activity plunges, worst downturn in service activity since 2009. That would have been a depression. Sharp reduction in both manufacturing, production, and service. Brazil's private sector registered its sharpest retreat since 2009, down from 42.9 in May to 41 in June. That's the composite index was inactive. It was indicative of a steep drop in activity. Seasonal adjusted services business activity index registered 39.9 in June, down from 42.5 there. The latest reading was the second lowest in the series history. Companies operating Brazil's service sector signal optimism towards a 12-month outlook for input in June, but the degree of positive sentiment was only marginal and remains below. The comment here: Brazil's private sector dipped further into contraction, and no doubt about that, they're in recession. The bleak PMI data suggests it's highly likely the economy will enter into a technical recession, will have entered into in Q2. The disappointing news on private sector was accompanied by accelerated rates of job cutting. Prospects for Brazil's service sector remain gloomy, approaching the second semester with high prices, high interest rates. Input costs by service providers rose sharply for 6.5 years, and a lot of this is self-created sorts of things. Service providers reported activity fell in response to steep, although slow drop in new business and inflows in June. Lower work levels led Brazilian services firms to trim employment in June. There's a report of ongoing efforts to cut costs, not usually the way to do it. Input costs faced by service providers in Brazil rose at a quicker pace, the quickest pace in over 6.5 years. Anecdotal information suggests that higher utility costs were the primary factors pushing up costs. The rate of inflation was steep and above series there. Conversely, input cost inflation at goods producers moderated to the slowest in year-to-year. Change in inflation in the private sector was the weakest in the current 8-month sequel. Slower rises was signaled by both manufacturing and service industries, with panelists reporting limited pricing power. The June data indicate a backlog of work held by private sector companies were broad, unchanged from levels the prior month. And this does it for Brazil. And let me just quickly see if we have anyone else in line here. I think we'll get Japan very quickly here. The PMI only just above the 50 there. This is Nikkei Manufacturing Purchase Managers Index. Is a composite single-figure index of manufacturing performance. Is derived from indicators of new orders, output, employment, supplier delivery time, and stocks of purchase. A figure greater than 50 overall improvement. It was at 50.1, down from 50.9 in May. Reports of a fall in new orders were commonly cited as the main factor behind the lower output growth. According to anecdotal evidence, the June margin little declines in coming new work was due to a lack of capital investment, challenging economic conditions. From Amy Brownbilt, she's an economist there. The rate of improvement in operating conditions at Japan manufacturers slowed in June. Production growth weakened along with a decline in new work intake. According to anecdotal evidence, a reduction in capital investments challenged economic led to the recent contraction in total new orders. Despite this, employment levels in growth territory for the third month. There, meanwhile, inflationary pressures persist, although remain historically muted. Well, they've been in deflation there for a very long time. In contrast, international demand strengthened in June as export orders increased at a faster pace in 1.5 years. A number of panelists mentioned favorable exchange rates helping there in terms of the yen, while others mentioned greater sale volume with China and with Europe. And a lot of these PMIs hold out to see how Greece will affect the euro. As a result, weaker production requirements, subdued demand conditions, buying activity was scaled back in June. However, the rate of decline was marginal. Employment, on the other hand, remained at a modest level. We mentioned that, so we won't go back over that. In other words, Japan, we see some improvement there. But just remember that all of these PMIs are tied into the reaction to the crisis in Greece, as it will affect the overall Eurozone. And 3 trillion euros that they could lose if Greece totally defaults and leaves the Eurozone is very substantial. That will mean they will have to dig into their pockets, which also means that taxes will go up in various countries. That happens when you have these economic events, we'll call them. Let's go now and do the numbers. The markets were closed in the U.S. and we'll close on Friday, I should say. Anyway, we'll quickly do the numbers here. The market data coming in. Look at commodities. The attacks on creditors, not unusual there, by various functionaries, including the finance minister there. These are Friday unless otherwise noted, and negative unless otherwise noted there. The BBC Global 30 was down 19.85 or 0.26. The FTSE was down 45.68. In Amsterdam, they were down 2.82 on Friday. The DAC was down 40.96. Germany would be probably the hardest hit country there with the Greek fiasco. In Paris, they were down 27.34. In Brussels, 32.30. In Madrid, 66.60. In Zurich, 48.64. In Moscow, they were also down 12.64. In Johannesburg, they were down 294.82. In Bombay, they were in positive at 71.92. In Karachi at 269.79. In Lahore at 30.12. In Colombo at 24.25. In Tehran on Wednesday, they were down 60.80. In Sydney on Friday, they were down 59.90. The Nikkei 17.29. Hang Seng in Hong Kong was down 218.21. In Shanghai, they were also down 225.85. The Dow on Thursday was down 27.80. The Nasdaq was down 3.91, and the Merc was down 0.64. In San Pablo, on Friday, they were down 586.78, and also down in Mexico 110.11. Now quickly at the commodities. Incidentally, T-Boone Pickens had a comment that there would be a return to $70 a barrel oil. The Brent crude futures were down $1.46 at $60.55. The spot was down $1.21 at $61.60. T-Boone Pickens, Texas Intermediate crude, was down $1.31 at $55.68. He's about $15 down, but what goes up will come down, and goes down will come up eventually, yes. But a lot of that is depend, Mr. Pickens, on what happens in the Eurozone. If there's too much chaos there, or we'll say in the summer driving season, we'll see what goes on there. The Forex futures there were up $3.96 at $1,168.25. Dubai futures were down $4.90 at $1,163.70. Silver was up 3 cents at $15.64. We'll skip along here. We won't get too much into precious metals. We will get into coffee futures. They were up $6. Soybean oil was up $6.35. Soybean futures were up $1.26. Wheat was down $1.75. Cocoa was down $3. And that was on the Eurex. Robust coffee futures were down $28. And the Bloomberg Commodities Index, which we now have, was at 101.86, and that was up 0.26, or 0.3%. That will do it for us, for those in the business. Next week, a productive one for the consumer. Keep your eye on the ball, as you have been doing. Prices are moderately priced out there. And for those in the U.S., a most happy Independence holiday to all. Good day.